So we're going to see how to do the progressive income tax numerical. So in the question, you will already get the income tax brackets and the tax rate applicable to each income bracket. So the first one that you can see, it is income bracket up to 10,000. So up to 10,000 there is no tax. Then for the next 10,000 slab there is so this is the first 10,000 slab. This is the next 10,000 slab. This one is a 15,000 slab from $20,000 to $35,000. So this is a $15,000 slab. And then you have anything above 35,000. So like that, the income has been divided into slabs and the tax rate is applicable as required on your income. Now this is also given in the question that there are 3 individuals and this is their annual income level, and this is the question that you have to solve. There would be something like this. So these could be probably 5 parts to the question. So we will look at each part at a time. So let's start with the first one. The first question is asking us calculate the income tax that each individual has to pay. So how do we do that? The best way to solve this question is to draw a table like this, okay, in which you are putting in columns like income bracket, tax rate, and then putting in the incomes of the 3 individuals that you're asked to calculate for. Those are the headings of your table. And then under income bracket, you're just copying down what was given to you in the question and the tax rate. So starting off with the first, the income is 14,500. So when we look at the upper limits of the tax slabs, so we see that okay, 14,500 is definitely more than 10. So the first 10,000 that is there, she will be paying 0% tax rate, and hence it's not taxable. The first 10,000 of her income is not taxable. What about the rest of it? So what we can do is a quick calculation where we are subtracting from 14,500, we are subtracting 10,000 and we are left with 4,500. Now on that 4,500 there is a 15% tax applicable, so we will multiply by 0.15 and we get 675 as the tax to be paid. So this is then our answer, 675, and we can just in the last row, as you can see, you can just write tax to pay 675, and over here we can put dashes right at the beginning itself when we see that looking at the upper limits. So the upper limit over here is the upper limit over here is 20,000, so definitely it's going to come into this slab. And when we know that this is going to be the upper limit, so we can just put a dash on the rest of the columns. Now let's apply the same strategy to the next one. So the next person we have on our list is Marcin. He has an income of 29,000. So again, looking at the upper limits of the slabs, it would probably come into this slab, which means that we can safely put a dash on the last slab because that's the income, it's not in that income bracket. Now, how do we calculate it? We know for the first 10,000 it's going to be 0% again, so we can write 0. And then what we're going to do is the next 10,000 that is there, we're going to put a 15% tax on it, right? So over here we can clearly see that it's going to go up till this tax slab. So we can take the upper limit of this tax slab, which is 20,000, and we can apply a 15% tax on that. So we would get 1,500, right? Next, we know that we're going to come into this bracket. Now, what is the kind of the amount that we're going to put a 25% tax on. What is that amount that is going to be taxed 25%? How do we calculate that amount? So that amount is simply, we are we had initially, if you can see over here, I will just underline it in blue. So initially we had 29,000. The first 10,000 out of that, we know that there's going to be 0% tax. So 0% tax and $0. The next 10,000 out of that, we have put a 15% tax. So 15% means 1,500. Now we are left with 9,000. So that $9,000, on that we want to put a 25% tax. So multiplied by 0.25, it will leave us with 2250. So that's 2250 over here in the table, and then we just total it all up, which is 3750. It's just a sum of all of these three, right? Okay, next is the last one. We have the income of 43,500. So again, let's look at the upper limit of the tax slabs, the same method. So we know that here there's no upper limit, and we are going to go here into this tax slab, so there won't be a dash anywhere. The first one, the first 10,000 is going to be 0%, so $0. The next 10,000 is going to be 15%. So we have already calculated for the previous question, so we can just write 1,500 over here. The next one is the 15,000. So we can see over here that this is a 15,000 slab. So for the next 15,000, it's going to be 25%. So here is the calculation that you can see. I will underline it in black. So 0 for the first time. After that, the next 20,000 is 15%, and then the next 15,000 we are going to put 25% tax, right? So if we'll calculate this will come to 3,000, this will come to 3,750, and so far we know that this person has to pay $6,750 in tax, but he has to pay more, obviously, because his income is more. So what we simply do is, again, from the initial income that we have, we take out the first 10,000 where he paid 0%, the next 10,000 where he had to pay 15%, the next 15,000 where he had to pay 25%, and we are left with 8,500 as the remaining income. On that 8,500, we want to put a 40% tax, and that leaves us with 3,400. So we have 3,400 over here. Okay. And 3,750 over here was there. So total is 8,650. So now in this way we have calculated what each of these people have to pay as tax. So let's look at our question again to see if we've been able to answer it. Calculate the income tax that each individual has to pay. So we have calculated the income tax that each individual has to pay. We know that it is this much: 675, 3,750, and 8,650. Now let's move on to the next question. The next question was determine the average tax rate of each individual and compare it to his marginal tax rate. So now let's look into these two terms, average tax rate and marginal tax rate. So average tax rates are defined as a tax paid divided by total income expressed as a percentage. So it's a simple formula for average tax rate. Average tax rate is equal to tax paid divided by total income multiplied by 100. Okay, So that's the average tax. And the marginal tax rate is the tax rate paid on additional income, which is the remainder of the income which moved on to the next slab, on which they had to pay a marginal tax rate. So now, what is the relationship between marginal and average variables? So there's a simple relationship between marginal and average. That relationship is that marginal increases, then average is going to increase. If marginal decreases, then average is going to decrease. Okay? This is one relationship between marginal and average. Now, marginal, we know in econ, we always say additional, right? So the additional income earned would, if that increases, then the average tax rate would also go up for that person. A good example to think of to make it easier to understand is when you have a test, the next test where let's say you got higher marks than the previous test. So when we take an average of all your test marks, that average will increase, and that average has increased because your last test the mark had gone up. On the flip side, if on the last test you scored lower, then your entire average comes down. So the same concept is applied everywhere whenever we have these terms marginal and average in econ. Okay, so when we talk about taxes, we know there are income taxes and there are indirect taxes. Income tax we just saw is progressive in nature. And how will we look at progressive taxes with the formula? It's just this. If the marginal tax rate is greater than the average tax rate, then we say that the tax is progressive. However, if marginal tax rate is lower than the average tax rate, then we say that the tax is regressive in nature. So this was like indirect taxes, and these are like income taxes. And if the marginal and average are same, then the tax is proportional tax. So how will we answer this question? So the second question was, determine the average tax rate of each individual and compare it to his marginal tax rate. So we can find out for each individual the tax paid upon the income into 100. So for instance, for the first one, we had calculated that the or she has to pay, I think it was tax paid, yes, 675 as tax, and the total income of the Borshi is 14,500. So 675 divided by 14,500 into 100, that's what we will write here. So 675 divided by 14,500 into 100. If you calculate, that will come to 4.66%. Always remember to calculate to 2 decimal places. Okay, and round off to 2 decimal places. Then the next one was we had calculated that the tax that Marcin has to pay was 3,750, and the total income of Marcin is 29,000. So again, we apply the same formula, tax paid upon total income into 100, and we get 12.93. And then we get for the last one also in the same way, 19.89. Again, we did the same thing. The tax that Joey has to pay was 8,650. So 8,650 divided by his total income was 43,500. So 43,500 into 100. So that would give us 19.89%. Now the marginal tax rate is basically the rate on the last dollar earned. So what was the last slab that they came under? So we can again go back to our table and see that the Borshi, she came under, let's use a green highlighter. So the Borshi, she was 14,500. So 14,500 would come under this slab, which is 15%. Marcin came under 29,000, which means he came under this slab. So his MTR is 25%. Deborshi's MTR is 15%, Marston's is 25%, and Joey's is 40%, right? So these are their marginal tax rates, which is the last tax slab they came under. The remaining income came under which slab? So we can see that in all cases, the marginal tax rate is greater than the average tax rate. So now this brings us to our next question. Provide two ways of explaining that the income tax system in this country is progressive. So the tax is a progressive tax if the ATR rises. Simple. So that's one way to show that the income tax in this country is progressive. The second column in this table above shows that the ATR is rising, which means that higher income individuals are paying proportionately more. The third column compares MTR with ATR and reveals that MTR is greater than ATR as expected. So there were two ways you are explaining in this. One is that the ATR is increasing, and the second way is that the MTR is greater than the ATR. So that's why we know that this country has a progressive tax system. This is the way you would write your answer in a paragraph. The next question was, assume that the amount paid by each individual on goods and services does not include taxes. Now, if you recall in the question, let's go back to the question which was given to us initially. So in this question, we have so far dealt with this particular column, which is the annual income level, and we have dealt with this table. But now we're going to look at this particular column, which is the spending on goods and services. So we are kind of assuming, or the question is given to us, that Deborshe has on an average her total annual spending on goods and services is 13,000. Okay, and Marston's is 24,000 and 35,000. So we can just take that information and write it, which we have put up in this table over here. Okay, this is their annual spending on goods and services. That same column written down as it is. Now the question is giving us the information that calculate the amount of indirect tax each will pay if it equals 20% of their spending on goods and services. So it's very simple. We just take 20% of their spending. So 20% of 13,000 is 2,600, and 20% of 24,000 is 4,800. 20% of 35,000 is 7,000. So we have got their indirect taxes, tax bill of each individual. Okay. Next is express the amount of indirect tax paid as a proportion of income. So indirect tax divided by income. That's what we have to do. So for example, the first one, I'll show you the first one. 2,600 divided by 14,500 into 100 is the amount of indirect tax paid by Deborshe as a proportion of his income is 17.93%. And the same way you can calculate for the others as well. And that's it. So there were 5 parts of this question, and we have seen how to solve each part of the question, right? This was the provide 2 ways of explaining that the country is progressive. This one was assume that it does not include taxes, the amount paid. So calculate the amount of indirect tax, and 20% was given to us. And the last one was express the indirect tax as a percentage, as a proportion of income. So now in this sheet itself, I have given you a practice question. This is from the presentation which I shared with you. So this is a practice question in that. So you have to answer all of these questions. This is given to you already. This table shows the income tax slabs and the tax rate applicable on each slab. Then this one is showing you their annual income levels and their spending levels, and then you have 5 questions which you have to solve in the same way. After you finish up with this numerical, on the presentation there are some slides given with an evaluation of efficiency versus equity. So the next assignment will be related to that, efficiency versus equity. So first finish the numerical, and secondly, after reading those slides and reading from the textbook and making your notes, write down how is there like a trade-off between efficiency and equity.